Welcome to Electrified. It's your host. Today I have an awesome audio excerpt from Baron, just recently from a Masters in Business podcast. He talks about investing in Tesla and SpaceX. I'm going to save the SpaceX bit for a future video, but sit back, relax, and enjoy this clip, especially after Tesla's earnings. I know some of you might be wondering what's going on with the stock price, maybe a little bit worried, although you shouldn't be by any means. If anything, it's an opportunity to add more. But all that aside, enjoy this, and I will talk to you guys here in a bit.
So, Ron, let's talk a little bit about one of your bigger holdings. You've been a buyer of Tesla since 2014. The stock has just exploded. Last year, it was up over 600%. Is there any upside left here? Where do you think the stock goes from here?
Well, we bought stock in Tesla. We spent $385 million between 2014 and 2016 to buy 8 million shares, 8 million one shares. And the average price is $40 a share, $42 a share. It's now $860 or $850. And so it's now $850 billion market cap. It was $45 billion when we started. I think that and I've been saying this for a while, when we bought it, I thought that we would make 20 times our money. We've made 20 times our money, and so far. And I think that it's going to be a $2 trillion company over the next 10 years, 8 or 10 years. That's $2,000 a share. And
wow.
Can we get lucky? Yeah, I can get lucky, and if this autonomous driving takes off the way I think it could be, that could be worth another $500 billion or $1 trillion. Ride sharing could be a really big deal. The solar roofs, that could be a nice business for them. The battery business. Now, when they build factories, the factories they build are for 250,000 cars a year production. And a factory, when they built them in California, when they built it in the first one in Fremont, that was about $17,000 of capital spending a car. It's now in China about $4,000 a car. And the factory in China is probably at 250,000. People thought it was going to be a 150,000 car factory, and that was the opportunity people perceived. And but we thought that they could do millions of cars a year in China. And that one factory they built so far is a 250,000 car factory a year, and which is now at the rate it's producing. And that's making somewhere around $2.5 billion a year. So they invested $1 billion. That's making $2.5 billion. When you invested in McDonald's a long time ago, you could invest $1 million as a franchisee. And if you worked, crazy hours and you put on your apron and got all dirty, maybe you can make $250,000 a year for $1 million investment. These guys have $1 billion investment to making $2.5 billion a year. Pretty wild. I mean, wow. Like Steve Wynn when he goes into China and they spend $2 billion on the first hotel in Macau, and they gave him. They were so happy that he came. They gave him land that he sold for $1 billion. He has $1 billion net, and he started making it $100 million a month. But this is Tesla. They make $1 billion investments, and they make $2.5 billion a year. They're going to do the same thing in Germany, same thing in Texas.
What about SpaceX, which Elon Musk also?
Wait, one more thing. And in Tesla,
sure.
The battery business, which I think the car business could be a $600 or $700 billion business in revenues a year, and making $200 million a year, $200 billion a year in 10 years. So that's how you get to this $2 trillion value. But that's not including the batteries. He thinks that the battery can be also a business as big as the car business. So think about that. So here he thinks he's going to go from 500,000 cars a year to 20 million cars a year, and he thinks his battery business is going to be as big as his car business. So I'm talking about the $2 trillion because of the cars. I'm not talking about it for the batteries.
So $2 trillion without the battery business. If that catches up with auto, like Elon says, that's $4 trillion. Then you think about full self-driving, autonomy, these other things, and you can see these numbers start to pile up awfully quickly. This next clip is super savage. I love this part and what he says about his thought process and how he started investing in Tesla. And then real quick, at the end of the video, I do have a couple of news items to share with you guys. So enjoy. I'll talk to you in a second.
And then when Tesla comes along, I said, gee, this is going to be this monster company. And what I want to do is I went to the board and I said, in 2014 to 2016, I bought all the stock I could buy for the couple of funds that I manage, and most of the mutual funds at Baron Capital, which are real estate or healthcare or fintech or emerging markets or small cap, they can't own Tesla. And so I and a couple of guys that could own it, I tried to persuade them and I wasn't successful. So I said, I'm not taking anyone's opportunity. If I invest in this, I'm not going to do it personally, but I'd like to take $50 million on behalf of Baron Capital and invest it in Tesla. And I think I can make $1 billion on it. And I can afford to lose $50 million. It wouldn't be pleasant, but I can afford to lose it. But I can't afford not to make $1 billion. And if I do make it, I'll give some of the profit to people who work at Baron Capital. In addition, that Baron Capital will just be stronger. And my goal is to make it last for 100 years. So I want it to have a stronger balance sheet, even stronger than it does now. So they gave me permission. I said, and I'm committing that I will be the last person to sell. So I'm the last person to buy. No one else is going to buy at Baron Capital, and I'll be the last one to sell. I'm not going to sell anything until all of the shares are sold by all of my clients. And the directors of Baron Fund said that sounds reasonable, and it's fine to go do it. And so I did that, and it turned into, after a 5-for-1 split, 1,000,001 shares. So I told, so when the 500 million 2 shares that we've sold so far for clients, I haven't sold a single share. The 50 million became 850, 860 million, or 900 million, something like that.
Okay, that's not too bad a return.
No, pretty cool. And I think that there's 3 more times to come from that, and then over 10 years. And so the advantage that we have is that there's hardly, I don't know any people, I'm sure there must be out there, but I don't know people who are investing for other people who said, I'm going to make a 10-year investment or a 20-year investment in a company, and as long as the fundamentals are as I expect them to be, stay with it, and I'm not going to worry about the price in the meantime. And so that's what I do. And as long as the fundamentals for here, the business fundamentals for Tesla, from the time we invested in it in 2014 to last year, the business grew from $2.8 billion to $25 billion in sales. The stock price didn't change. It went up and down, up and down, up and down, and then it went up 10 times. The stock price caught up to the business, and now the business is going to grow faster than the stock price over the next 10 years, I think.
Wow, that's amazing.
So he couldn't afford to not make $1 billion. And I just thought that was a great way of thinking about investing. So many people think about what they can lose and the downside, and it's important to know the risks. But ultimately, there's so much upside and so much potential, especially right now. So hopefully you got some encouragement from that Ron Baron clip, and just sit back and enjoy the ride over the next 5 to 10 years for Tesla. A quick news item from yesterday, Tesla is now going to offer collision repair services in their service centers. So before, this was not an option. So if you got into a more serious accident, you'd have to go to a body shop for repairs, but now Tesla is going to do at least some level of the service, which definitely means more revenue for Tesla. Of course, you would never want any revenue from accidents, but this is part of the business. And Jerome Guillen did recently say, for us, the best service is no service. We spent a lot of efforts trying to improve the quality and the reliability of our cars. In the last 2 years, the frequency of service visits are reduced by 1/3, so customers have to come less frequently into service, which is really the goal, no service. This is a huge difference from traditional auto. They make a huge portion of their margins from their service division. One of the other reasons why Tesla is such a great company, because they're literally the opposite. They want to minimize this instead of gouging customers on the service aspect. In the last news item to watch, some federal agencies are now questioning and looking into Tesla's new steering wheel, the yoke design, to see if it's actually legit. So there's a chance that the Model S refresh comes with a regular steering wheel. Of course, it's a coin flip, could go either way at this point, but it's something to keep an eye on. And I know a lot of people are rooting for Tesla not to have the yoke wheel, but me personally, I'd like to at least try it before making a judgment. I've never driven with one, so I'm definitely skeptical, but I think it could be cool. And seeing that screen right in front would be a lot easier too. But let me know what you guys think. And like I said, it's something to keep an eye on. But please like the video if you did. Consider subscribing for more Tesla content, and I'll see you in the next video. Have a great day.